Okay, Edwin, we're live. Thanks for joining me all the way from Spain. I'll go ahead and give you the floor to introduce yourself to my audience, kind of give some background about who you are, what's your expertise, and what you're building.
Absolutely. Thank you very much for having me, O'Connor. So, yes, my name is Edwin Mata. I'm the CEO and co-founder of Brickken, formerly a lawyer, specifically in mergers and acquisitions. So, I was a guy wearing a suit 24/7, and look at me. Now I have a shirt. I decided to enter the space 2017 and just came in love with what was the technology of blockchain. And 2020 decided to begin my own startup, Brickken, where we do a tokenization of financial instruments.
So, and I usually like to do this, kind of go into the guest's career before they were a founder, and I'm curious what your life is
Uh,
like as a lawyer,
oh
and
my
and
God.
why you decided to leave that profession and start Bricken and enter the Web3 space as an entrepreneur.
Yeah, so I mean the lawyer side of things I really love, but it's a service provider. So it's when you're a software provider, you deal with the client, but you don't really deal with the client. They hire you, they like your product and whatever. But when you're a service provider, it's very much in contact, and that can be good and that can be bad. But with lawyers, it's very difficult to be in a positive kind of round because we're always doing something, and it's like, oh, I have a new contract, or we have to do all of these things. I was working a lot in data rooms, just trying to do my work, and it was like, "Oh, we have a deadline for tomorrow. We have," and it was like, "But I'm not a robot." So it was like the love that I had for legal types of things, it was fading out. And then in 2017, I entered a company, a legal tech. We were doing something completely different, became an in-house, and that's where I got connected with the technology. That's where I got connected with software, and I was like, I can still be a lawyer, but I don't have to be a service provider. I can be floating my know-how through the technology for other people to amplify it. And ever since, I think I'm just more in love with this kind of situation where it's very heavy to be client focused. It's something that some people like. I just don't anymore.
Would you recommend, because I have friends, I think a lot of young people, there's a path. They say, hey, I'll go to law school and I'll become a lawyer. It's a great career. It's something that I should do. Is it something that you would recommend that young people do if they are considering it, or should they consider a different path?
No, I think, for example, I became a lawyer. I was doing a double degree. I was studying economy and legal at the same time, but I love more the legal side of things. And I was like, you know what? I like business, but my true passion is understanding how contracts work and what is like, how to solve things just between parties. So legality side of things gave me a solid background. Kind of like I will always recommend people to study law, not to become a lawyer, but it's super interesting. I mean, right now when I'm dealing with negotiations, or even if we have our internal in-house, everywhere I go with my know-how as to how can I negotiate, where is the open, like how to do this, how to do that, because my background is already telling me, watch out for this, or this is a red flag. I'm not just focused on the business per se. I'm also trying to look at the bigger scope as to how to best situate Bricken itself as well.
Got it. Can you maybe go into your first introduction to crypto and the Web3 space and how it
Yeah.
piqued your interest, how you kind of fell into it?
Yeah, so the company I was working for got a European Union grant. So they got the subsidy to start developing smart contracts associated to digital identities. So it was kind of like, can we as persons have ourselves or our data on the blockchain and then start signing processes, start doing recognitions and all of that, or identification? So it was more of a proof of concept. So at the beginning in 2017, I only heard about Bitcoin, but I was not involved. I didn't even really know what was blockchain, so I had to study how this technology worked. And I stumbled onto a white paper from a company called Chainlink, where they had something that I didn't know what it was, oracles, which was kind of like bringing offline information data online. And I was like, this opens a lot of words because as a contract, you live purely offline. So you have a contract signed between people, and yeah, it can be docu-signed, but it's not online. But what if you start bringing some of the clauses or interactions online, and then you can build automatizations on top? So that's where I was like, wow, this is very interesting. Maybe we already have a lot of information online. Maybe we can bring more information online. So some of the clauses can be automatized through what are called smart contracts. So 2017, I started reading a lot. 2017, even more. And 2019, I quit my job and I was like, I'm going to go build something with all the things that I just learned. That maybe the digitized world is going to be the only world that we actually live in now.
And so, did you immediately start Brickken upon entering the space and entering the smart contract space, or did you have exposure to other areas of crypto? I mean, you mentioned Bitcoin, um, other blockchains, other coins, or was it just right into Brickken and smart contracts?
No, actually, well, during that time, I started joining some communities, which at that time I didn't know it was a community. I started learning from other projects. I saw a lot of movement and noise that I have was not used to it because obviously, when you're in a Web2 company, you don't have like fan base. So it was like, what is this? Like, why is people on Telegram all happy about the project? I was like, this is completely new for me. So I was learning a lot of the interactions that were happening just because I didn't understand this whole world. So for a year, I was doing some freelancing just to generate some income so I can put it in inside the company. But I was working for my own already. So then 2020, I was like, okay, now we have a solid idea, a solid foundation, and a solid team. Now we can decide to actually pursue what we were trying to do, which is just bring financial instruments online.
And what would you say in terms of like I feel like I have a decent understanding of blockchain and cryptocurrency. The people you deal with or the majority of the public, would you say that they have an understanding of this tech, or do you spend a lot of your time kind of explaining what it is and what you're trying to do and why it's important?
I think the industry as a whole in the blockchain will still a lot in the education phase, right? Because if we were in the adoption phase, we will have more money, more backers, more institutional players, more like the traditional money on chain, right? So this is something that is happening right now, but we're still very early. When I entered in 2017, 2018, it was there was a like nothing yet. There was a lot being built, but even this community where I stumbled, there were like maybe 50 people in a Telegram. Right now, you have 15,000. So it was like the very early stages to try to see where it was. Everybody was trying to educate themselves, um, but then 2020 happened. It was better, but we're still very much educative. When Brickken was born, we were doing so much education, so much writing, so much blog posting, so much that we're trying to showcase our work and say, like, you know what, this is a new alternative form of what you're used to. So right now, I believe that we're still far off from mass adoption, but we are definitely entering a trend where the adoption is getting at a faster rate. We don't have to go from the 2017 to the 2020 when it was very slow, still very heavy. Institutionals were saying screw crypto, that's a scam, all illegal things doing. To 20 to 24 is like maybe there's some things that are actually great with that technology. Maybe we should choose proof of concepts to 2024 where we have now big institutional players jumping in and say like, you know what, the world is getting tokenized, and that's what even the CEO of BlackRock said. So that's kind of like we are about to enter a trend that is just going to be faster and faster and faster and faster because efficiency of money is still a big denomination as to why people are using blockchain. It's not for the crypto, it's pure efficiency of cross-border transactions, money flow, capital allocation, settlements, reconciliation process. There's so much things that save up money. And this is why big money is jumping in.
Can we back up and just do the basics of why you mentioned blockchain, like what that is specifically from a technology perspective? If you're explaining it to somebody, a potential new customer, somebody that's come to you and is interested in blockchain, how do you describe it to them?
I mean, the world itself has the definition, right? Distributed ledger. So companies have ledgers, accounting books, and every person even has a ledger, a personal book. Well, they should, right? The ones who keep the things neat. So that is all private information. When you have a ledger in the company or you have the transactions, it's owned by a centralized authority. So if you want to have information to that, you have to request, it has to be given, and that just blocks certain information of inflows and outflows. But imagine that now all of these ledgers become something very, very much public. You don't need to have permission to get that data, and data can create projects, can create products, can do a lot of things just because the possession of data or the entrance or information and acknowledges that information can certainly optimize certain things. So if I wanna own something, I don't need to go to the bank anymore, because in a distributed ledger, I can become my own holder of my own money and my own bank, because the bank is my centralized ledger where they manage my money. But in a distributed layer, I can be my sole manager of my own money. So that just starts bringing new plays into hand. Since I am the holder of my own money and James in front of me is the holder of their own money, can we interact directly without a centralized authority? Because we don't even go to the centralized authority telling us what is the position of who's managing. Because when do Swift payments and all of that, we have to go to the centralized authority to request authorization for us to move money. But if we are in this decentralized information and managing ledgers of money, then we can interact. So that's why P2P became so powerful in distributed ledger, because everybody suddenly become their own owners of their own capital, their own assets. And this is kind of like where we are, just moving that ball around.
Yeah, and I don't disagree. I think it does have a lot of power. I'm curious of your perspective on the banks. You mentioned the banks or the middlemen that kind of have the control and the power right now. What are your thoughts on that? And essentially, to your point, if it's P2P, I can send Bitcoin to you right now without any bank involved. I mean, how does that work though from a banking perspective? I feel like they're not going to give up easily. They're in a position of power and control, and they make a lot of money because of that, and they don't want to give it up. So, is that not a worry of yours, or is it just a matter of time, or do banks become integrated in this in the future? How is it going to work from your perspective, considering that there's traditional powers at play that aren't going to give up that power easily?
I mean, I think the evolution of bank, we have to understand how it became at the beginning. They were a custodian of assets who, because of the custodian, they will give you an interest because the banks will go and move around the money to make money themselves. But you can also go and request loans because they own your capital. So they have a position against they can make claims. You could go and mortgage because you could buy a house because you had a position of them and they knew all your assets, to suddenly just becoming a only custodian. So the evolution of the bank was a retractment of what it was pursuing, which was kind of like, I'm a generator of capital, I move capital, but then suddenly the retail started not having absolutely any of the qualities as to why the banks existed in the first time. Now, as a self bank or self promoter, you can have access to different kind of interests because you are the only asset owner. So you can play in a level not the same as the bank, but in a level that allows you to actually generate money on top of your money as your own custodian. So I don't think banks will be the enemy or anything. It's just that the custodian phase has faded. So they will have to reenact and create new investment opportunities to be able for me to allocate my capital to them to be at play. And we're starting to see all of these new interactions at bank where they're losing the custodian phase because also there's a lot of banks. Now interest rates is very ridiculous what they give you 0.1% even, and if you want a long term fixed rate, maybe 10% if you lock your money for 30 years, which is absolutely ridiculous. So I think just the fact that there's a new competitor, which is the self person or the self institution, against them, they're going to have to create new products. And this is happening. They're starting to generate new products to attract capital, which has to be interest attractive. It doesn't have to be that I'm just giving you the money because you are the only entity where I can custody my money, because now I can custody my money. I can use my own money, and maybe that format of view is no longer necessary for me to trying to move around in the economic markets.
And you've mentioned this a couple times. Do you have any recommendations for people out there if you own your safely generate interest or loan it out? I know in 2021 it was kind of a crypto craze, and there were a lot of platforms. So, hey, put your money in Anchor and you can earn 20%, and then that project goes bust
Yeah.
because it was tied to Luna or whatever it is, and then you lose everything. So I think you're right. It does present a lot of promise, but I feel like people can get in trouble if they're not careful. So do you have any recommendations, just considering your knowledge in the space, about a safer way to do that in 2024?
Yeah, right now, the space, obviously, like any other space, they had a lot of bad players. When there's opportunity, there's also opportunity for bad players to jump. So that's why we saw the Luna, the interactions that had to clean. I mean, it's still a new space. That's without a doubt. Now they are more audited firms about providing this. There's some institutional players that are licensed in the United States that can actually provide certain products that involve cryptocurrencies. So it is starting to get more regulated, but it's still very young. So a lot of people went into default with the big crashes. But if you assimilate when a bank crashes, yes, you do get a percentage of your money. For example, here in Europe, if you have 1 million in a bank, they can only insure you for 100K. So you do still lose 900K, but you don't lose that 100%, which is slightly better, but it's not that great of a solution, right? So when you ask me about this, now there's a lot of investment in treasury bills. So if you want to invest in treasury bills and you don't have access, you can do it through blockchain technology, where there are various providers who can give you a decent interest of 5 to 10%, which is very nice, steady, and it's backed by a treasury bill, which is audited by a firm, assuring that that treasury bill actually exists in the accounting books of the company. So we are moving to that threshold of really trying to understand where regulators can jump in, where auditors can jump in, because in the end, the foundation of everything is just trust. So to back to your question, I'm not gonna provide any specific platform because maybe a lot of things are going to happen, but nowadays education is more accessible, so you can read a lot about certain platforms that are performing exceptionally well, and then just try to allocate certain part of your portfolio, if you have a portfolio, into these new interesting financial instruments being created in the blockchain.
One other thing I want to talk about while we're kind of on this subject, I think you mentioned it, is that the blockchain allows a means of exchange with anybody in the world that has a cryptocurrency wallet without a bank involved. I think one of the issues with that is just the fluctuation in price most of the major cryptocurrencies experience. I mean, you could take Bitcoin, for example. So I don't know if you have an opinion or perspective on how that will work in the future. Is it more that we will adopt something along the lines of stable coins to then send money without banks involved, or do you feel that Bitcoin will be a means of exchange in the future where people are purchasing goods and services or sending Bitcoin between each other as a means of transferring money and value?
I think if we go to the offline version, gold is the store of value, and USD is the economic unitary value that it's moving markets across the globe, right? In this sense, Bitcoin is the store of value, and USDC or USDT, a stable coin, is the one that we transact with. Same thing. No, nobody receives gold, so I wouldn't even try to think about exchanging Bitcoin for my services because of the fluctuation. But against stables, then I'm all in for it. So everything that happens offline, we're just gonna mimic and optimize online. And I think we should not diverse from the like the Bitcoin gold. They are stores of value, or silver. Nobody gives you silver as a payment. So it's kind of like USD works, or the yen, or the euro, or whatever. And in the digital world, you have all of other things that can fluctuate, and they can be for trading, it can be for store of value, it can be for many things. But you also have the stable coins that can help you transact and interact without losing value on a transaction.
Makes sense. Do you kind of you foresee a future where the fiat system and the blockchain and cryptocurrency kind of merge together? And like you said, there's a digital euro, there's a digital United States dollar, USDC obviously already exists. I'm sure there already is a euro stable coin. But is that what you foresee in the future? And it's kind of integrating into our current system with banks and everything. And then you have some of the other major coins behind it. Is that fair?
Yeah, absolutely. So I do think 100% is going to happen. There's already proof of concepts with the centralized bank digital currencies. There's various countries who have tested with their central bank authority issuing CBDCs because they want to know how the digitized money is going to work. Because right now they have a situation which is kind of like a private company just decided to create one of the biggest transactional value or monetary units, the stablecoin. So the banks are losing authority against it, and they're like, we need to understand that some private companies are now becoming or holding treasuries that even or moving money more than some certain countries, and that's just insane. So how they're doing it now is we need to protect that power because we're still the governance and the central authority of a country. So we need to understand that the digital money is going to heavily fluctuate for the next couple of years, and we need to be involved. So they've been issuing CBDCs in Europe. There's a lot of different, even in the sandbox of different countries, testing CBDCs. Now there's certain private countries applying for a license of e-money in the European Union to create a legalized, compliant stable coin in Europe. So I think in the end, all money will be digitized. The matter is who you're going to trust or what money you're going to trust. The one created by the central authority via a CBDCs or the one created by a compliant audited private company, stable coin. And that's, I think, is going to be the dilemma for us as users to understand which one goes. And in the end, I think it's just a matter of, I would say, taste, but also accessibility. I think people will transact with the one that are more near to and easier to obtain. And then that's something that maybe governments are going to have to understand, that even if they create a CBDCs, maybe they won't be the one more used. So I think it's going to be a fight of powers in the coming years to understand which one becomes the widely mostly acceptable, because we're talking about millions and millions and millions and millions and millions of transactions generating fees. So fees is the money denominator.
How do you reckon with that? CBDCs seem to give even more power to central banks and governments, and it seems that the origins of cryptocurrency, as we mentioned earlier, is decentralization and power to the people. So how are those two things going to work? And do you have any hesitations of saying, okay, the European Union or the United States now has a digital currency and they can track, tax, monitor every single transaction and every single user using the service? I mean, what do you think about those implications of the technology as it progresses?
I think that nowadays it's even happening, and we're just throwing bombs knocks to the CBDCs because, for example, right now in Spain, if you deposit above, I don't remember, I think it's 500 euros, that gets triggered to the central bank of Spain saying there was been a deposit of Fiat of 500 euros. So we already been in the supervision of every single being transacted. If I want to send a transaction via bank to bank above 1,000 euros, it already triggers an alarm saying I just moved 1,000 euros from my bank account to another bank account. So CBDCs is just the natural evolution of what is already happening. They want to know how we move our money, how we store, who we contact. It can be for AML, it can be for taxation, it can be for so many purposes that I don't think CBDCs will add anything else that it's already not happening. Maybe they will go for the cent, which is okay. Now we know where the cents are being moved. But right now, all countries are already heavily involved in monitoring money flows because AML compliance, all of these anti-money laundering directives are being in place. But also, it is because bad players. I pay my taxes year to year. I don't have money. I declare everything. I believe I'm a good player. I like paying my taxes because it gives me here in Spain like access to free medics, to roads. I like the system. I but I understand that bad players they also want to take out. But bad players exist offline. They will exist online. They will exist on chain. So right now it's just evolution of governments trying to evade bad players for from them keep happening. So it's a weird autonomy.
Another thing I want to touch on is the number of blockchains that exist today. Obviously, you have Bitcoin, Ethereum, Solana, Binance. You mentioned earlier, for example, Bitcoin's the gold, and then stablecoin, whether it's government backed or privately backed, will be likely the way we transact in the future. What does that mean for all of these blockchains? Like, why, if that's the case, why should somebody own Solana or Avalanche or Ethereum if there's going to be consolidation in the future?
Yeah, no, I think there should be consolidation even at the chain level. This is kind of like when you have internet providers in a single country. Yeah, you can have Verizon, Sprint, AT&T, and that should be enough because they're like you don't need to buy, you don't need to have more. And now we have thousands of different like internet providers, and that just makes absolutely no sense. Some promise you more megas, some promise you unlimited data, some promise you unlimited minutes. But in the end, it just sounds to the one is like the offering I don't think it can be increased that much from where we are now. Yeah, it can be more efficient and optimized, but I don't believe that the change situation is healthy for the ecosystem. It breaks down the aggregation of different applications or even stable coins. So I think in the coming years, we're going to see that many chains will die. Only few should survive. And I think it's also healthy, a consolidation of maybe three, four, 10, if you want, just to have more offering, but not the situation right now where I just see new chains and it's like, but what is it that you bring more efficient than something that already exists? Oh, it's because I do this. Do you really? So I don't think it's a health situation right now, the multi-chain factor that we're living in.
So would you agree that for the most part, a blockchain is a commodity or a commoditized technology or will be in the future?
Very interesting. So I believe the token of a blockchain is a commodity, but then this is because it fluctuates, but it also allows you to transact in the blockchain. So it is actually a product because it allows me to interact with the blockchain to create a transaction. And that's just very weird because we have a commodity that acts also can act as a store of value because the value of it fluctuates, but it's also a product we can be exchanged. So I think we have to get new asset classes because some things right now are just very weird. I don't think if it's a commodity. I don't know if it's a store of value. I don't know if we call it cryptocurrency. I think we need to define this and just make sure that everybody goes with it because this is why they say new asset classes are being formed. And I do believe that. And that's the beauty of being digital, right? One code can be executed and be have 1,000 different forms versus gold it's physical, it won't mutate, it won't change class, it won't change its chemical balance, it won't change. Gold will always be gold. But in this world, since it's just code, today is something and tomorrow can be something completely radicalized different.
So, and correct me if I'm wrong, you've chosen to build Brickken, your platform, on Ethereum. Is that correct?
Yes, as a starting foundation, Ethereum.
And why did you choose Ethereum? Is that kind of indicative of a bet that you're making that Ethereum will remain, as you mentioned, one of the top 10 blockchains in the
Yeah,
future?
no, absolutely. Zero doubts. It's still the one with the most developers. It's still the one with the most transactions. It's still one of the most secure, still one of the most decentralized. So there's still a lot of components that make it one of the most. And we always say like Ethereum virtual machine, EVM. So many chains are forks or are obtaining the code from the Ethereum. Other chains, L2s, are being built on top of the Ethereum. So Ethereum has a lot of things that are negative, such as the high transaction fees, sometimes the speed, but they're getting huge updates all the time. But Ethereum as a foundation of the whole blockchain is like ecosystem will always be key and determined. Now, the new optimizations, the new chains, they will they will depend a lot on Ethereum because we also have other kind of blockchains that are completely different from how Ethereum was built and they have a harder time sustaining, such as Cardano, which was supposed to be super huge. It was super huge, speculative, but at the building, it was quite complex. So Ethereum, since it's Ethereum, can actually move you around and you can act in other chains because of how compatible it is. I think Ethereum is going to be by far the most used still in the years to come. Very hard to take that crown of the king.
And what about you mentioned it, the high transaction fees? I mean, when is Ethereum going to figure out the gas fees so that you can actually move money or transact on the blockchain cheaply, as I think is promised or is being promised as they continue to develop it?
Yeah, I think they went almost 2 years ago through a three-stage. I'm not a tech guy, so sorry if I'm saying something wrong. I have to put the disclaimer here. They went through a 3-4 stage. I think we already went through the two first stages, and the third one was called sharding. And when the sharding happens, they're gonna break how the transactions happen between how the nodes can send information. Gonna break it down and it's gonna be less heavy. So I think after the sharing, we will see a reduce on the fees. We already seen it every once in a while. How when I went there in 2020, there was some days that you could easily spend like $70 or $100 just to send a transaction, just because of how high the fees were. Right now, I'm averaging maybe. 5, 10. So we're already seeing it, but still expensive. Because you can go to other chains and it can be like 0.000.1. And it's like, oh, like it's not even a cent. I think Ethereum has a long way to still to produce that efficient, kind of like almost uh, centless, so to say. I think we're like 2, 3 years still away, but obviously a lot of work is being put on that. And that just says the new chains they're gonna have. The biggest thing they're competing because a lot of say like how many transactions, how much volume, how much anything. But the only reason why most of the time they're being used is because they're cheap. So if Ethereum becomes super cheap, why would I go and use another chain?
Yeah. Yeah, and maybe you can answer why you wouldn't do that. Is it because you've already built on Ethereum? Does Ethereum have kind of that network effect where, hey, everybody's already on it, so they're tolerating the high fees for now? I mean, it seems like a no-brainer to move to a cheaper chain, but is it just wait and see, or we've already built here, so we're sticking it out?
Here in Brickken, we decided to start in Ethereum because then it will be easier for us to move across chains. Since we start in the source of many of the other chains or how it's built, we decided to start here so we can move. So, for example, right now, our clients, we don't push them if they don't want to Ethereum. We tell them it's expensive. You have the same qualities if you go on, for example, to Base, the blockchain from Coinbase, super cheap. So right now, our source is still in Ethereum. We believe in everything good and we still build on top of Ethereum. But because of that, we can easily start moving across chains just because other ones are just replicating or building on top as a called L2 or now the L3s. So for us, it was more of a matter of efficiency, although it is costly. But we also have clients who still use Ethereum for some reason. So they feel safe, secure, and they're like, I still want to transact in Ethereum. So it is their choice.
Okay. And let's get into Brickken specifically and what you're building, right? Because I think your product platform on the blockchain is much different than buying Ethereum or buying Bitcoin and holding it as an investment, right? So maybe you could just articulate maybe how you pitch it or how you sell it to potential clients. What is the benefit of what Brickken is building on the blockchain? What do you provide to real world assets and companies and people that they can take advantage of?
Yeah. Okay. So we deal with tokenization. Within the end, it's the digitization or representation of an offline asset. In this case, equity is offline, debt is online, and these are financial instruments. So there's securities, others can be other things. So we decided that it is more efficient to have this online or on chain just because of how you can interact against the financial institution. If I have a capital of a company and I want to increase it, I have to go maybe to my family, friends, to a venture capital. You have very limited financial possibilities for you to get capital. Capital is costly. So maybe through blockchain, you can reduce the barriers of entry. You can invite other people across the globe in environments 24/7. So it's kind of like you provide more options to how you can raise money, capital, raise loans, debt. So this is kind of like why we're bringing financial instruments on chain, just because it does turn out that it's more efficient than what is we used to. Offline contract, document, paperwork, signing process, lawyers in between the whole flow. So we decided that technology provides certain assurance, security, efficiency, optimization, and that is why financial instruments will start running on chain. And our pitch that began in 2020 got validated this year when BlackRock decided to fund or deploy a fund on Ethereum because they see that it's just more capital efficient to execute certain transactions, to get capitalized, to move money on blockchain than what they're used to, which is offline per se. It's still online because it's monetized, but I'm talking about not with that technology of blockchain.
Do you have more information about how the BlackRock fund works? So you say it's built on Ethereum, and so is it driven by USDC, for example, or how are people utilizing or transferring money to BlackRock through the blockchain?
Yeah, so they still not in a decentralized format. They're in a centralized format that they have to run through Securitize. So people have to log in. to do that through the BlackRock dashboard. Then that's BlackRock has to acknowledge. It's still very much centralized, but it showcases that the possibilities of now deploying a full fund that you can review the transactions online 24/7 because it's on Etherscan. You can see certain movements, so it is kind of like the most transparent fund right now, but it's still under a centralized umbrella. Is that bad? No. I think it's super good what happened. I mean, you don't go 0 to 100. Let's say right now with this move, they're going 0 to 20. That's already huge advance. Yes, it is going against USDC. Circle is providing the transactions in USDC. There are other players saying, "Hey, now since that has a value, why don't you collateralize? If you have tokens of your BlackRock built token, you can bring it out to me. I know it has value. I can collateralize you and give you a loan against that token." And those interactions are becoming all on chain, all transparent, 24/7, which is building something completely different. If right now I own shares, I'm going to say of Apple, why not? I don't even own the shares of Apple. The broker owns the shares of Apple. I have a position in the brokerage. If I want to have my certificate of shares, there is a joke that you can never know how to get the certificate that you own the shares because the broker will never try to give you that certificate. And if I had that certificate, for me to get money against that certificate, I will have to go to the bank, and the bank will say, like, I don't even know what is this certificate. Please go. This is not how we're gonna give you a loan. All of that happens right now. But now we have all of this, and all of new information and new products are being funded. So it just shows kind of like new opportunities are being arising just because everything is an open, distributed ledger.
So you really see this touching kind of every aspect of the things that we own, right? Like homes, cars, stocks, debt, equity in a company. Is that fair?
I do believe assets are gonna be represented on chain just because information will be more easy to maneuver, to send, to receive, and that will become it more optimized. So if I want to get a loan against my car, my title deed of a car will probably only get me so far in my own bank where they're custodian, but in this format where I can prove and assert I'm the owner of a Ferrari, so to speak, a 1979, some classic, maybe somebody on their own chain from Indonesia can say, you know what, against that title deed, I'll provide you a loan. We are trying to understand that those flows are happening. They're going to increment because the limit now of me asserting my ownership of assets, it's on a paper document that can get me so far. Can get me to the branch next to my house if they accept me. But on chain, it can probably get me a little bit farther. So yes, I do believe a lot of things will go on chain.
And so, can you maybe provide a little bit more information about how this would work? Is it an NFT? The title of the vehicle is essentially an NFT. And is that what you do as well with Brickken? For example, if somebody wants to raise capital for their company, whatever their ownership document and proof that they own and run the business is then transferred to the blockchain as an NFT.
Yeah, so NFT is just it's another technology. Some people use NFTs, some people use tokens, fungible, ERC20s. So in the end, it's just how you're going to represent that. Maybe a full deed makes sense on the NFT because you're the sole owner, but maybe it makes sense on an ERC20 if you have 10,000 owners of the same property. So it's just a matter of understanding what is the asset being digitized and embedded on chain, and then you can decide what is the best technology on chain to push that. So yes, it can be an NFT, but yes, it can also be an ERC20. I think we're just trying to understand what is the best technology for what format. So indeed, titles where it's a one-to-one, I have no doubts NFT works. When you bring more people into the variable, maybe RC20 works. So, but the important thing is that all of these representations, I have zero doubt that in the end of the day, they will be represented on chain and in my wallet, where I am the sole custodian and sole owner. I can prove that I have all of these assets and then go out into the market to get a loan, to play with some other interesting financial instrument, to do a lot of things that right now I feel like I'm just not capable of.
And so what's currently the biggest use case for Brickken, or what's the real world asset you guys are working with people on bringing it on chain the most? Is it raising money for a company, or is it something else?
Yeah, so we being used as a financial instrument for raising capital. So we have companies raising capital, so they do their capital raise or their next equity raise, such as a seed round or a Series A on chain. So we tokenize the equity and they do the capital increase through us. And we also have a lot of real estate and they like debt. So they want to do a new promotion and they want to raise capital to deploy it and buy the building or create the building. So they start issuing debt. A lot of people go in, fund their debt, and that's a way they get interest back. So in the end, we are a form of financial alternative for funding, but we're trying to evolve to, well, not trying, we're actually evolving more into the management things, because when you have an asset, it's comprised of three stages. So the first one is the origination. So you create the asset on chain. So you originate an asset. Then you have to distribute and sell. So that's the second phase. For people, they use us for this one, two, and then they forget about the three, which is ridiculous hard. How to manage your investors, how to pay dividends, how to do reporting, how to communicate. So we're trying to now evolve so people acknowledges that we're also an asset manager. We give you one and two, but if you want, we can also succeed in giving you the third part, the whole management of the life of your asset and your investors.
And what is your monetization strategy? Is it a percent? Is it just a flat fee? Is it a you invest in companies with people? We take some of the equity as well for
Yeah.
providing our
Oh
service.
no. We don't co-invest in anything. I'm a software provider. I stick to making the software works and functionalities. So you grab us in the evolution. We're a SaaS officially now, so we just charge a monthly rate for you to have the three stages. I think SaaS models right now we are overboarding, like everything is a SaaS, but people are used to SaaS. We were doing one-time fees. That was not efficient. A lot of people would say like no, but then after and everything. So there were two complications. We started testing SaaS. People hate SaaS, but people understand SaaS. Let's not reinvent the wheel. We already reinvented too much with the tokenization. Give people a SaaS, and now yeah, we have a better detonant just because we went to something they already know.
I'm curious if you could kind of walk me through the process. You mentioned it like it's the first and second step in the process, right? Like let's say I wanted to raise money for my company. How does that work? Is it that the investor has a cryptocurrency wallet, an Ethereum wallet, and they're sending me USDC for exchange and an equity, a tokenized equity stake in my company? Is that how it is? It as simple as that? And then the money is just held in a cryptocurrency wallet and transferred that way, or what does it look like from the
Yeah.
customer's perspective or the investor's perspective? Is it really pretty
Okay. So
seamless?
yeah, actually, I'm gonna guide you through a process. If I was pitching to a new client, right? So through a Google form, you create your asset. We guide you through a questionnaire. What is the name of your asset? How much of your asset? How, like, if you want to pre-distribute because you already have some investors. All of that through a simple slash Google form type form. Everybody knows that. We didn't change the rules. Then you want to distribute and sell. So that means you want to bring your investors on board. So we give you an investors portal like a Shopify. If you wanted to create an e-commerce today and start selling with the onboarding of the asset, the distribution, the proof of payments, and all of that, you go to Shopify, boom, done. We give you a Shopify version for tokenization. You create an investor portal where you can send the link, people can invest, review, and start deploying capital. Once they register, pass the KYC, they can connect their wallet, they can send bank transfer, they can pay with Visa, MasterCard, they can invest in your project. Simple, investor portal, Shopify. And then in the third format is once you have all of that, you have treasuries, you have investors. So think of a carta. We have a management tool where you can manage your investor table, cap table, however you want to call it. You can manage your treasuries because yes, your company wallet suddenly has, I don't know, I make it up 1 million from 1,000 investors. So you really want to manage that. So we grab three things that we think a lot of people know, which is a Google Typeform, a Shopify version, Anacarta. We blended and we decided to make the three into the tokenization phase. So we were just trying for people to understand that when you come to us, we're not gonna go into this weird like, oh my god, I'm so lost. What is happening here? User experience for Web3. For Web2, user experience is super important. For Web3, user experience is you live today, you die tomorrow. That's like the most crucial aspect Web3 companies can have, just because people are not used to the wallet, the custodian, the self things. It's kind of like an ongoing process. People are used to school sign in. We have to do all of that in the Web3 environment. There's a lot of things happening in the back just to have what people know. Register, deploy, own. Three steps. We're not there yet in Brickken, but hopefully before the end of the year, we will be in those three simple steps.
So I'm curious if you kind of view yourself as like democratizing venture capital, right? Or I'm just thinking of what the alternative is for somebody that wants to raise capital where they do likely need to deal with a VC firm or an angel investor and lawyers and things like that. Is that part of your value proposition or part of the your pitch and how you sell?
Yeah, I mean, in the end, it's I'm not trying to finish with the banks or the venture capitals or the family offices. I'm just trying to provide a new alternative through all the different possibilities that one company may have. So banks who have, or for example, clients who we have, they go through different formats and still come with us. We're just a new part of a already well-made system. So you guys want to go to venture capital, please go. You still need that. It's amazing that you can land that. But if you want retail investors or you want this digital investment, then we can be an add-on. We actually recommend our clients not to go full 100% in this, because I wouldn't even recommend somebody to go full into the bank. It's kind of like the best way to fund yourself is through different players, different know-hows, different theses. It can leverage you a lot of different positions. So I am not replacing anybody. I'm just optimizing investment or crowdfunding for a certain threshold. They can play with the rest, and that's it. I mean, it's just providing a new form of finance.
So with that being said, what is your kind of grand vision for Brickken if you look 5, 10 years down the road? Where do you want to be and what services do you want to be providing?
As a founder, I still want to be alive because this is a very hard job. But in reality, I love what I do. I love my team, so I want to go and say like we were part of the journey for the full tokenization of equity, just the transformation of the financial markets. I really want to be in 10 years. Obviously, we'll break and succeeding, but people acknowledging that we were just part of the journey, that we were already building, and people looked at us and say like, hey, those guys were part of why. Now we understand that all equity runs on chain. For me, it's all about legacy.
And maybe to just kind of close this out here, what recommendations do you have for young people that are maybe interested in working for a company like yours or interested in learning and working in this Web3 cryptocurrency blockchain space? Because I think there are probably, as you mentioned, we're still in the adoption phase. There's still millions, maybe billions of people that don't even know what we're talking about or what you're even building. So how can somebody land a job or a position to kind of take place in this big shift in the building of this technology?
Wow, yes. So it is funny that in Web3, I've seen a lot of hirings happen on Twitter, which actually blows my mind. There's companies pushing out their job positions on Twitter, which is I think LinkedIn it's still be seen. I'm a link user, so I don't know if it's boomers town or anything, but Twitter they like to be more fresh and they like to look for culture and talent that likes to think outside the box. Trust me, nothing makes you think more outside the box than applying to a Twitter thread or some randomness they think, because that's really who you like. They push you. It's like you want this job, fine, you have to make versus the normal apply CV kind of like it's just a different format. Yes, there's a lot of LinkedIn. Yes, there's still a lot of things, but there's some crazy. There's even Telegram groups where it's like people looking for a job. They join these groups. It's like, hey, I'm looking for the jobs. Hey, let me DM you, and it's like, oh, this is really peer to peer. Like this is
Yeah,
crazy.
yeah. No, I think that's super cool. Well, hey, I appreciate you, Edwin, taking the time to kind of come on and let me pick your brain, allow me to learn about what you're building and everything in blockchain. So to kind of close this out, I'll give you the floor. Any final thoughts? Where can people find you?
Yes, of course. So, actually, like I said, you can find me on LinkedIn, Edwin Mata. Please send me a request or DM. Happy to follow or get brain prick. I'm always up to the discussion of why Brickken or why blockchain. And if you want to know more about Brickken itself, please log on to your website, www.bricken.com, or follow us in any social media. We're big in Twitter. So, at Bricken, BRICKKEN. And yes, happy for happy to continue conversations if possible. Thank you.
Yeah. Thanks, Edwin.